Hello guys, and welcome to the fourth episode of the TradingVille Sunday Routine. So as always, we'll be running you through the past week's trades, the analysis that we looked at, just to see how they played out, and also we'll be looking through the week ahead in terms of the markets that we're potentially going to be looking at and their buying and selling zones respectively. Now, firstly, what I wanted to start off with is the TTF Signal Service Report. That is for January. So this is a monthly report that we do, and that's going to be available for you all to view on our website. But in short, we got 521 pips in total for that month, and that equates to 7.52 units.
Yeah, so we took 37 trades during the month of January, and obviously when it comes to actually putting it in perspective, let's say you were trading from an account size of $2,000, risking 5% per trade, so $100 per trade, you would actually be up 37.5%, which equates to around $750. So a very successful second month for us, and obviously moving forward, we're now heading into February. So let's look at the markets and the trades that we took last week. So Yas is going to cover those, and then moving forward I'll look at the analysis for the week ahead.
Alright guys, so jumping straight into last week's trades, we start with Euro GBP, which for me is one of the most boring pairs in the FX market. As you can see, very choppy price action throughout. We actually held this trade from the previous week as well. So as you can see, very choppy price action throughout the week. We hovered around the break-even phase for the majority of the time, so it was really boring. But we were briefly in profit, briefly in loss as well. We ended up actually getting out of this market around this region at a 15 pip profit, anticipating the market could potentially be reversing, which it actually did. So luckily, in hindsight, we actually got out at a 15 pip profit. Now, if we were to be self-critical, if we had actually held onto this trade for another day, we would have actually ended up with a 80 or 90 pip profit on this trade. But nevertheless, 15 pips out of that Euro GBP market was a decent result. Now, with CAD JPY, we actually just rode this trend line to the upside very nicely. We entered this market around this region, rode it all the way up to where the market started consolidating and potentially running out of steam. We actually exited the trade around this region here, where we saw this bearish engulfing candle actually close below this trend line, indicating potentially that the trend could now be running out of steam and potentially reversing. So we took 70 pips out of this trade, and in hindsight, a very good exit strategy there as well. Now, in Euro NZD was very unfortunate in the sense that we entered this market around this region as it tapped into our demand zone. We saw some bullish pressure, which was great. We were around 50 or 60 pips in profit on this trade. However, as we were sleeping around 5 a.m, as you can see, the interest rate hike decision came out of New Zealand, and although there was no rate hike or change whatsoever, the market reacted in a very bearish manner, and we were stopped out practically in our sleep. Now, the UK FTSE 100, we saw the market come into our supply zone and push quite sharply to the downside from this region. So we entered short on this market around this region. As you can see, there were multiple rejections around the manipulation zone of 7125, also indicating that the market could finally potentially be pushing itself lower. However, we were stopped out around a 50 pip, around the 50 pips region around here. A very tight stop, limiting our losses as the market continued to push to the upside. Now, GBP Aussie dollar. We got into this market around this region where we saw some bullish pressure coming from our demand zone. It broke the trend line, and then we waited for the retest of this trend line to be able to go long in this market. However, this ended up being a fake out, and it just continued to basically ride the trend line to the downside. So unfortunately, we were stopped out of that trade as well. Now, gold has been very choppy as of late. However, we saw multiple rejections around this region, indicating that the market could potentially be pushing lower. It did. We saw this bearish engulfing candle strong indication of sellers coming into this market. So we waited for a little bit of a pullback to enter in and around this region here. And had this been a trade where the risk reward was just 1-to-1, we would have actually come out of this trade as in a profit, as we were around 60 pips in profit in and around this region. However, the market reversed very sharply from this region, and we were actually stopped out in this trade as well. Now, Germany was our saving grace for the week. As you can see, multiple injections in and around this region, indicating that the market could now be pushing to the downside. Now, we saw this bearish engulfing candle enter the region of 11,250, which was immediately pushed back down by the sellers, and that was the indication that we really needed to be able to go short on this market. And then this candle here also looked very nice. So we entered this market in and around this region, gained a good 164 pips, and this was done to perfection in the end. As you can see, around this hourly candle here, the market actually reversed and completely blew up to the upside very, very sharply. So a very good trade there, 164 pips out of that one. Now, Euro USD, we entered long on this market, and the stop loss on this market was actually done to perfection. As you can see, we came around 4 or 5 pips away from the stop on this trade. So yeah, very, very lucky, if you want to call it that. But we would just like to say, we'd like to say that the stop loss was in its right place and where it should have been. So luckily for us, the market actually reversed just before the close of market hours on Friday, and we ended up getting out of this trade around 22 pips in total. So yeah, not a bad trade in the end. Now, USD Swiss franc is the trade that we're actually holding currently into the coming week. As you can see, multiple injections in and around this region in our supply zone as well, forming a triple top as such. So we are potentially looking for the USD to weaken in the coming week and hopefully give us a nice risk reward on this trade as well. So that pretty much covers everything from the past week's trades. Now I'm going to pass you over to Matt, who's going to run you through the following or the coming week's trades and the analysis of the markets that we're going to be looking at, and potentially the buying and selling zones for those respective markets.
Okay guys, so let's look at the week ahead and the markets that we're actually going to be focusing on, and those that we are looking to either be buying or selling this week. So we're going to kick it off with Germany. So we had a very fantastic trade on Germany last week. We are extremely bullish on this market, so what we are going to be potentially looking for, as right now is not very good risk reward ratio to enter the trade, we will be looking at entering in this green zone here, potentially around this 11,160 level, where we'd be looking to take this market long for the week. So let's see if we drop into that buy zone. The next one we're looking at is gold. Again, we are very bullish on gold, especially after its very strong week last week, and again just looking for that pullback retracement into that sort of 13-15 level, maybe a little bit lower if we're lucky, and then if we do start to see those rejections around this level, we'll be looking at taking this market long as well. We then have our Aussie dollar markets. Okay, so we have Aussie dollar Swiss franc on the cards and Aussie dollar US dollar. Okay, so we are extremely bearish on US dollar this week, so there are going to be a lot of common bias sort of in the markets that we're looking at, such as Aussie dollar, US dollar, Euro US dollar, and a few other of the US dollar pairs as well. So with Aussie dollar, US dollar, we'll be looking at dropping into the 0.71 region, hopefully then seeing some rejections, seeing the buyers coming into this market, and then potentially taking this market higher for about 150 to 200 pips or so. We then have the Aussie dollar Swiss franc. Again, we are very bullish on the Aussie dollar as well. So there's two scenarios that could play out. One will be obviously the market not giving us that pullback, not giving us that opportunity to actually get a better risk reward, and taking out the 7,240 region. If we do that, we may be looking to take the market higher. But the risk reward will not be as good as if we actually see that pullback into that 0.71 level, where we'll be looking for those rejections and looking for those signs of buyers entering the market. We then have the US dollar pairs, so we are short on US dollar CAD. We are very, very close to our selling zone at the moment, so we are just going to look for a little bit of a retracement and a little bit more indication that sellers are ready to take over this market, and this will be around that 1.33 level, okay, a very key manipulation level for this pair. We then also have the US dollar Swiss franc. Now this is actually a trade we're already in, and Yasser's already covered this, so I won't go into detail on that one. But we do have the USD ZAR market, okay, so the US dollar South African rand. Again, very, very bearish on this market, so we are looking for that slight pullback, okay, slight pullback potentially into 14.25 or maybe even 14.15. Again, just depending on that price action and hopefully seeing those sellers really enter this market where we'll be looking to take this market lower. With regards to the euro pairs, okay, we're looking at euro USD, as I mentioned, long, and actually just looking for an ever so slight pullback first into that 1.127 region, where we'd be looking at taking positions long if the price action tells us that we should do so. We then have Euro JPY, so again looking for a short on this market, so Euro JPY looking for shorts, potentially just to see another attempt to break higher, and if obviously the sellers combat here and actually take control of the market, then around that 125.50 level we should be looking for opportunities to be shorting this one. We then have Euro Aussie dollar, again looking short on this euro pair, pulling back into that 1.59 manipulation zone, manipulation level again, and if we see the price action around there, we'll be looking at going short of this market. And then finally we have the GBP markets, okay, so all of our GBP pairs at the moment look very, very bullish, but as always we want to try and get the best risk reward for our trades, obviously, to make sure that moving forward these trades are the most profitable that we can possibly make them. So it's finding that perfect entry. So we're looking around the 1.28 level on GBP USD, which is where we'll be looking to buy the market, and for GBP CHF we'll be looking for that sort of 1.29 level. If we do get that, we see that price action, we'll be looking at taking this market higher. And then finally the GBP JPY trade as well, so obviously a bit more of a pullback to occur on this one of a potential sort of 100 pips or so, but if we do see that and again see that price action, see those buyers coming in, that's where we'll be looking at taking these markets moving forward into this week. So that wraps up the analysis for the week ahead.
Okay, so we've covered last week's trades, last week's markets, and obviously we've also covered now the analysis for the week ahead, potential buying zones and selling zones, and the markets that we're interested in the next 5 days.
Okay guys, so that pretty much wraps up this week's video. Please make sure to subscribe, like, comment, and stay tuned for next week's video. In the meantime, please head over to our website and check out the signal service report for yourself. In the meantime, until next week, have a good week guys.
Oh.